right, it's Tuesday. Just going to go over a couple trades that I did. First of all, the watch list. I'm looking at Box here on the daily. This was previous resistance. Now looks like it's new support. Had a really good day yesterday. Following through today. I'm going to see if it can pull back here. I'll take an upside bias to it on the weekly. Really nice. Broke out of this channel. It's a ascending triangle, I guess, over several months. So pretty cool. It also looked like it broke to its all-time high here with the previous high over here. So I'm encouraged by this pattern. Looking to take a long bias to it. New Relic. So I had a good day yesterday. Kind of broke out of this pattern. So you could trade it if it comes back down and finds support here. You might be able to trade it to the upside. I would expect it to go no higher than this shaded area. I think this is going to be an area where it stalls. Lots of headwind up there. So maybe take a long bias, ride it up to this area, and then you can go ahead and take a short bias with it. So maybe trade this one up and down. On the weekly, same thing. Right, you've got this major sell-off, then it's bouncing back. It's going to come up here and retest these moving averages. That's the 20-week and the 50-week. So we'll watch it. Some bearish momentum, so to the stuff to the downside. Bear with me. Equity Residential Property Trust. So this thing has been, this level here around 92 has been acting as resistance for a while. Came down. Now, you could kind of make out here there could be a potential head and shoulders formation, or inverse head and shoulders formation, which would be a bullish pattern. So right, one shoulder, another shoulder, I'm sorry, the head. So this would be the neckline, 92. So a break above the neckline would be a pretty good breakout for the name. I'm actually thinking that if I'm taking a downside bias to this, maybe not. It's just setting up here. I don't know which way it's going to go, but it's an interesting chart formation. Let's save that. And this is it on the weekly. Again, so this is some key support here. I like the way it broke out here, and it's acted as support. So your downside here is going to be at 82.50. So uptrend still intact. So we'll watch it. We'll see what happens. Moody's. So this one has been in the downtrend. Came to this low, came back up, hit this resistance. Headwind here, kind of came off again. Interesting pattern. Let's see if it comes back up here. Retest this. If it can break out, maybe there's something to the upside. If it fails, maybe something to the downside. Again, not trading it, just watching it. On the weekly, this looks pretty ugly. So it basically broke through its 20-week, its 50-week. It's come up, it's retested both and failed. And now it looks like the 20-week is crossing the 50-week to the downside. So I'd say overall, the longer-term trend of this name appears to be reversing to the downside. Let's go over a couple trades for today. First trade I did, so let's talk about CVS. CVS was on our watch list. I'm actually going to trade it. We're reporting earnings. Here's so much. Messy. CVS. EEE. Alright, so they're reporting May 4th. So I kind of like the chart here. So I like the way it's been coiling, right? It's been in a pretty tight range after a pretty good move higher. So I basically took a straddle on this. I'm expecting it to go higher or lower upon earnings. Again, anywhere above this line, below this line is profits for me. So I just need it to be beyond this red area by expiration. So what I did with this one here, the CVS, I bought the 104 puts that are expiring May 6th, right after earnings, and I bought them for 312, and also bought calls, May 6th calls, 104 for 335. So you can see how the dynamics work on this. I just need this thing to be, I need volatility to come back in once they report, and we'll see where it ends up. Next trade I did today. Agilent Tech. So this, I just did a naked put on this one this morning. So I went out there with the May 20 130 strike puts, and I paid $4.55 for them. Right now they're up to $6.25, so this trade is working out. I did this morning, I was taking a look at it. It's been in a downtrend. It's been turning. The MACD turned lower yesterday. It seemed to hit that 50-day moving average and bounced off. So I decided to, and yesterday it broke through the 20-day. So I decided to take a short position. I wrote the puts. I'll probably see it come down here to the 126 level or so, maybe retest this area that was acted as support before, and maybe take them off. We'll see where this ends up. Goldman Sachs. Goldman Sachs, similar to CVS, they're going to be reporting soon. Look at Goldman Sachs. Oops. Goldman Sachs is reporting on the 14th. They're reporting this Thursday, so they're reporting in 2 days. I like Goldman Sachs. I'm going to take a look at the weekly here. So this is the weekly. It's been trending lower. But it's kind of been in this range. If you take a look at the dailies, it's been in a downtrend. But what I do like on the daily is that it's been making this lower low, but the MACD has been making these higher lows. So this kind of bullish divergence is encouraging. So upon earnings, if we get a snap higher, great. If they completely miss and a snap lower, that's fine. What I did here as a straddle. So I basically put the straddle on, so anything in the green and anything in the green above and below it, I'm making money. I just needed to move out of this red area by expiration or before. And the way I did that was buying. I bought puts, the 325 strike. I bought it for 10.10. And then I bought calls, 325 strike, and these are for April 29th expiration. And I bought those for 11.50. So it's my cost of the trade, and you can see again the dynamic. I just need to be outside of this red area on or before expiration. 2 more trades. So I did a call spread here. So I'm taking a look at this name. This is Biolab Lab, ticker symbol BIO. Stock kind of broke down here, broke down, just been in a downtrend, kind of looking ugly. I saw yesterday or the day before, it tried to pop through its 50-day moving average, failed, and seems to be coming lower now. So this morning I put on this spread, so anything below this line, so anything below 623.60 is going to be profits for me. Anything above it, it's going to be a loss. So what I did here for the bio is I sold May 20 calls, 620 strike, and I sold them for $18.15. And then I went ahead and I bought the May 20 630 strike price for $15.44. So that spread is mine to keep should this name continue to stay under this line. Now it looks like it's breaking down here. It broke through the 50 here, tested the 50 here, tested the 50 here, all acting as resistance. Did it again, so let's see if we can get another leg lower. And the last one I have here is CRL. It's Charles River Laboratories. Another call spread. So here's similar to the previous one. It broke through its 50. 50 acted as resistance, 50 acted as resistance, came through here, tried to break out, acted as resistance on its way down. So I did this call spread here, assuming that it's going to stay underneath this $312.56 before expiration, on expiration, or possibly prior. Looks like it's following through on the sell-off today. I really would like to see it break through this 20-day moving average. That would give me confidence that we're going to be retesting these lows. I don't have a weekly for this, but that's basically the trades, and let's go over how I did that. So I sold calls, the May 20 calls, 310 strike for $9.75, and then I went ahead and I bought May 20 calls, $320 strike price for $7.20. So I get to keep the spread, the difference in between, should this name stay in the green prior to expiration. All right, that's it for today. Thanks.